Hello traders. This video is about the protocols of the market, focusing on the seasonal patterns of the market. Usually in April of each year the market is usually bullish, because the investor will come into the market during the spring season, and they will invest, and they will harvest in October. So usually the month of April is a very bullish month, and the month of October is a very bearish month. This is one of the protocols of the market, so you need to be aware of the protocols of the market. I will show you on this chart, some of the month of April and the month of October. In most cases, you will see that the month of October is a bearish month, and the month of April is a bullish month. Usually the bullish season will begin in April and the bearish season will begin in October. This is in normal condition. As always, remember that nothing remains intact in the market, that the market is not normal, the market is dynamic, the market is changing constantly, regarding the political situation, the economic situation, and the mindset and the sentiment of the market and the economic condition of that particular time. So we will focus on the month of April and the month of October. Looking at this quarterly chart of the Euro USD, which is one of the indicator of the market, like the crude oil, like the S&P 500, the Euro USD is excellent market indicator. So if you are trading stock, if you are trading commodity, you must pay attention to the Euro USD currency pair. Some trader will say, I'm completely trading stock, but you are part of the currency, because if something is affecting the currency, it will definitely affect the stock. On the other hand, if something is affecting the stock market, it will definitely affect the forex market. There's no market completely independent on its own. All the market are quite connected, and they influence each other carefully. So you cannot discount the forex market if you are a stock trader, and you cannot discount the commodity market if you are trading for instance the forex market. Very, very important point. So here we will focus on one of the market protocols, which is the month of February, the month of April, and the month of October. Let's get started. At this point in time, this is the month of October. This is the month of October 2010. As you can see, it's a bearish month. This is a quarterly chart. So this candle here, that where I'm moving my cursor here, October, November, December. This is the quarterly chart, followed by another 2 quarters that were down. So this is the beginning, or this is in October 2010, as you can see here, and the price went down big time. You see here, no October 2010, this is October 2009. My apology for that. This is October 2009. The price was bearish, as you can see. Usually the month of October is a bearish month. Talking about the protocols of the market, the October is a bearish month. You can see this quarterly candle, which is October, November, December, was bearish. Very important. Here we will pay attention to the month of this is the month of April. Here where I'm putting my cursor now, this is the month of April here, April 2010. As you can see here, was quite bearish for the Euro USD. For one reason or another, the market was bearish. As you can see, this is what I'm talking about, that nothing remained intact in the market. As you can see, that the market went down in the month of April, as this is in April, May, June, the price went down in 2010. So this is a contrast season pattern, as you can see. But if you see that very often, when you see April going down, if you see the quarterly that is beginning in April going down, the chances that the following quarterly candle will be bullish. So very important point regarding the market protocol, focusing on the month of April and the month of October. When we normally the month of April should be bullish, but when we see the month of April bearish, we will wait for the next quarter to open. So the month of April is bearish, the month of May is bearish, the month of June is bearish. talking about the market protocol, the following quarter usually will be bullish. Okay, very important. This was happening here. Okay, so we have this quarter went down. This is a quarterly candle beginning in April 2010, went down. The following quarter beginning in July 2010 was bullish right here. Okay, now this is the April candle. This is the candle, the new candle here for the April 2011. This is a normal April candle, which is starting very bullish, as you can see here. Okay, this is a normal typical April candle, usually bullish. The professional usually will place order to buy at the beginning of April, okay, and will take profit at the end of June. Okay, very important. And they will place order to sell at the beginning of October, okay, taking profit at the end of December. This is one of the protocol of the market, paying attention of the month of April and the month of October. As you can see here, there was a contra-seasonal pattern here, and the month of this April, this quarterly candle of April 2010 was bearish instead of bullish. If that happened, the chances that the following quarterly candle will be bullish, as you can see here. Okay, moving forward, we will look at other. This is the month of April 2009, which is perfectly bullish. As you can see, this is a normal bullish quarterly candle. Okay, as you can see here. Okay, this is it. If you have a normal bullish April quarterly candle, chances that you are likely to have a bearish quarterly candle starting in October. This was happening here. Okay, so moving on, also this is the month of April of 2008. As you can see, this 2008. Okay, this was the time during this the bearish season. This is April 2008. As you can see, this candle was bearish, which is, this is not normal, because you can see that the price was going up for some time, overextended, followed by exhaustion candle here. This candle here is exhaustion candle. It's normal for this candle here to be a bearish. This was happened. Instead of traders taking profit at one particular point, giving a healthy pullback during this uptrend, they were quite greedy and aggressive, and they pushed the price up. And this was happened here. This was happened after the overextension of the price. The price will definitely turn around. Instead of having a healthy pullback somewhere in the middle here, the greedy traders were pushing the price up to this level here, and instead of having a bullish quarterly candle beginning of this April 2008, we have a perfect doji starting here, which is a bearish candle here, followed by a bearish seasonal candles. Okay, you can see clearly that when a market is overbought and overextended, when traders are very aggressively bullish, or on the other side aggressively bearish, the market are likely to turn around. This was happened. It's just a common sense of what has happened. The markets normally going up should give a healthy pullback, inviting other new traders to enter the market. But as you can see here, this was aggressive buyers buying non-stop, only to crash the market down. If you see a market going in what we call a vertical move to the upside, chances that the market will crash back down where it has begun. It's happening all the time. Okay, so this was a bearish April here in 2008. Okay, very important. And we have again, because the whole season was bearish, we have a bearish April and also a bearish October here. Because the month of April was bearish, you can see that this candle was have a very a long tail here, because some traders bought it because they were expecting this candle to be bullish, because the April was bearish. They were expecting October to be bullish. So you see how people bought it here all the way up here, but because the bank crisis, they sold it down further down. This is about the protocol of the market, paying attention of the month of April and the month of October. This is the month of April 2006. As you can see, it was again a normal quarterly candle, a bullish quarterly candle. And if you look carefully here, this is October 2006. Instead of having a bearish candle, which is a pullback to allow traders to take a bit of profit. This is what we are talking about. They were aggressively bullish all the way up to April 2008, where they crashed the market. When you see that the seasonal pattern has been override, okay, or violated, the chances that you have a crash waiting ahead somewhere else. You can see that it is October 2006. There was no bearish season. Okay, moving on again in April 2007, it was a bullish, and again in October 2007, it was again a bullish. So October 2006 and October 2007 was perfectly bullish candle instead of having a bearish season, because traders were stubbornly bullish and aggressive buying only to crash the market in 2008. Instead of selling gradually, traders were so stubborn and they were so greedy traders, okay, and they crashed the market in 2008, causing all sort of economics problem in this session here. So be aware of that. If you see 2 October being violated, be very, very cautious when you are buying. Okay, so this is about the market protocols, paying attention of the month of April and the month of October. Okay, and if you go back a bit in 2005, this is the month of April 2005. As you can see, was bearish instead of bullish. Okay, if you see that, you know that there is a bullish season waiting ahead somewhere. Okay, if you see a bearish April, unless we are in a proper downtrend, okay, there is a high probability that we may see a bullish season. Repeat, if we see a bearish quarterly candle beginning in April, unless we are in a bearish downtrend, a proper downtrend, there is a high probability that we may see a bullish season ahead. And right here in October, we have again a bearish small candle followed by a bullish engulfment here, and the market did turn around. This is the protocols of the market, paying attention of the month of October and the month of April. Here again in October 2003, you can see that it was 2003 was a bullish year, as everybody knows. The month of October was bullish, as you can see, instead of being a bearish, okay, only to be followed by a 2 bearish quarterly candle here. Pay attention to the month of October and the month of April. Okay, in April 2003, it was perfectly bullish, as you can see. So this is about the market protocols, paying attention to the month of April and the month of October. I hope you enjoyed this video also, that you will put into practice in order to cream the market consistently. Thank you for watching, and speak to you very soon.